Yep.
Good morning, everybody. Why don't I see myself on the screen? There we are. Yay, me. Hi. So, should have really come on 2 minutes earlier. We missed the NFP pop. And let's not get overly whatever about this pop. But the initial thing that's going on, might as well start where we are, is once the unknown becomes known, the unknown is the non-farm payroll results, right? Right. Once the unknown becomes known, then the uncertainty, which is the volatility, the estimate of the expected move, comes out of the chain. There's a rehedging that's going to go on, especially what's local, what's near where we're trading, that's going to be affected by IV changes. And then that's going to settle in. And then part two, so to speak, is the open, and then where the market decides it goes from here. Now, this move may continue, it may not. That's not the point I'm trying to make. The point I'm trying to make is they, the ubiquitous them who control the universe, the 20 great families on the planet who control the universe, who are the members of the Skull and Crossbones Society, who are on Epstein Island, they aren't trapping you in here to get you to buy it up here to then short it and send it down there. There's no they, there's no ghost in the machine, okay? Now, there are high-frequency traders that are scalping, whatever, but let's just learn to take responsibility. There's no they. We make decisions based on what we see. Okay, now that I got that out of the way, I got that rant off my chest. Let's go on. So anyway, looks like Mikey likes it, and maybe we continue to all-time highs today. About time, really. We've been touching around at that 7,000 level, 68, 80 something. I forgot what the closing all-time high was. Maybe we take it out, maybe we don't, we'll see. Anyway, so here we are. Okay, so whatever, US jobs, manufacturing, payrolls, whatever. I see numbers coming in down here. I don't care what the numbers are. I care what the market thinks the numbers are. The market seems to like it. US job average wage, whatever, I don't know. Probably the economy is strong, and they like it. But if it's too strong, then they don't cut rates. I don't know. That's the narrative du jour for the macro growers to talk about. Okay, so we're already at the top of the chop zone. So mentally, we just have to kind of shift our zones. Okay, a quick review of kind of yesterday, just and this is from my daily plan from Options Gelt. Click subscribe below there. You can subscribe via Substack. There's a free, I'm not sure what the politically correct word for free is. There's a free version, and there's a premium version with paid content that has my detailed daily plan and that gets you into the premium Discord where I screen share and we talk about trade setups, whatever. But anyway, so here's the daily plan. So yesterday we closed near 69.40, ancient history, 40 points ago, near the low of the day. And I just want to point something out in the trivia department. Now we're going to my Discord just for 1 second. It's Doc's commentary channel. Here's what I pointed out to my subscribers, and this is something I've been noticing anecdotally, quantuitionally for years. We were messing around with where we were going to pin, where we were going to close yesterday. Now it looked like 55.50, maybe 60, somewhere in that range. And all of a sudden, we lost 50. We undercut, we went down there. So what I'm showing you here is the 1 DTE. This was what today's profile looked like yesterday near the close. Okay, so yesterday's profile near the close, we're not looking at that right now. And you see where this is negative gamma, but this is like my back of the envelope vector resolution. This is where the 1 DTE steered us. I've been noticing more times than not, especially when the outcome is in doubt, there's a few large levels that are in play at the close of the day. The weight of the evidence then goes to what's in the 1 DTE that happens to be local. It's not always there. There's not always a local strike that's right there. What happens to be local, meaning nearing spot. And there it is. And that's where we close, right there. We undercut, we went down there. Okay, so anyway, and that kind of trivia is in where I lost myself. Okay, so I just wanted to point that out because I thought it was interesting. It's something I've been noticing for a while. I mentioned it in the room sometime, and yesterday it was just like so glaring. I don't always catch a screenshot of it. I caught the screenshot. Okay, so today is simple. NFP sets the first job. Yes. Let's not forget this. We have Fed speakers today, and Chewy posts the calendar in the daily plan in the calendar section on the Discord, whatever, and I have it in my plan as well. And we have the 10-year auction at 1 o'clock. I'm not a macro bro, even though I play one on YouTube. And what seems to be quite obvious is how the 10-year auction is received based on these NFP numbers, et cetera, is going to help set the stage for the market expectations going forward. So does the 10-year auction confirm this move? Does it, muddy the waters? What happens with it? Just like the goats like to crap in the hay and in the water, and then it kind of muddies the water, and then they don't want to drink it. It's the same thing. Is there going to be a turn in the punch bowl? So, okay. So here we are. Unemployment, we had that. We have Fed at 10 o'clock, a Fed at 10:15, a 10-year auction, a treasury statement. Then after market closes, we have Fed Logan. Other than that, there's not much going on. And we have some earnings today, McDonald's, T-Mobile, T-Mobile, whatever. These are just ones that I think are significant, kind of larger caps that have some significance. KHC, which is Kraft Ties, consumer staples, the whole rotation trade. GFS, Global Foundries. That's one that just let's talk about stocks department for a second. Global Foundries is one that might be a screaming bargain at some point. I'm not sure exactly when, and I have a speculative position in it that's underwater now. That's a US-based semi-manufacturer. Now, yeah, they have a lot of debt and all that other crap, whatever. But with the whole, and right now, Intel is a poster child of that. Does Global Foundries, does GFS get the blessing of the administration and investment or something? I don't know, OpenAI invests in them, or who knows, NVIDIA, I don't know who. But it just seems on a risk-reward basis, that's an interesting name. Interesting name, upside versus downside. GFS, Global Foundries. New IPO came out a few years ago. Okay, so now all this has shifted. So I'm just going to go to the options depth and let's see where we are, not where we were. Okay, so where we are right now is 80-ish, right? 75, 80, basically yesterday's high. Yeah, basically yesterday's high-ish, 72, whatever, kind of right at the top of my chop zone. We're supposed to stall one way or the other. All right, so let's talk about this. And the exact way to trade this is going to be in my premium daily plan, and and updates will be in the Discord, and sometimes we'll go out on wherever, on Twitter or wherever. Where am I? So remember, like, subscribe. Okay, so where are we now? So we're right here. Oh, look at that. A bar to the left, a negative gamma bar, market maker short, customer long, attraction magnet, scale the ladder. Holy shit, just like it's supposed to do. And here we are. Okay, so what are we at? We're at the top of the chop zone. We're at an inflection point. Let me just make sure that everything is refreshed and all that. Looks like it is. And but BUTT, these are small numbers. 500 contracts, 800. These are smallish numbers. Even this larger bar, 1,300 contracts, customers are long. It's significant, but small, but we have a ladder. Chutes and ladders. Remember, I talk about chutes and ladders. I talk about that all the time. Chutes and ladders, ladder up, potential shoot down. Chutes and ladders. Now, these often become sticky and we kind of form new zones. So right now we're in this fishbone zone up here, over 90 and over 95. Might be hard, but we could definitely do it. And we have this little 90, 95, 7,000. We have a few longs with a stall at 70, 10, a bridge too far probably. And we have more sold calls up here at 70, 30. And so if over 70, 10, and just do your vector resolution from calculus, third semester calculus, which I took 55 years ago, so I might be a little rusty. I was just doing the arithmetic this morning. I took this shit.
Doc, I took it 4 years ago and I'm still rusty.
Add a half a century to that.
Yeah, cut yourself some slack.
Okay, and so the vector resolution will send you kind of right here. 70, 20, maybe a little less because this is a stronger vector up here and here, but we'll call it in here. Here's this whole messy zone, sticky zone, 95 to 50, round numbers. So we got kind of, you can kind of think easy round numbers just as reference points while you're trading. 75, 50, and up on top, it gets a little more nuanced. 90, 95, 05, up on top, it gets a little more nuanced if that happens. To the downside, we have a pretty clear picture, pretty clear path. Below 60, so we get into this whole zone over here, 69.55, that's long chutes and ladders all the way down to 20. Not saying we're going there, but conditional, you never know, volatile, whatever. So if below 69.50, if we kind of get out of this mess that we're in now, there's really nothing from a gamma point of view, not from a look left on the chart, a Fibonacci, Elliott wave, 9-second EMA, whatever it is that you use. That's not what I'm talking about. There's nothing from a gamma point of view to kind of stop us. And we have this 45, 50, they have this area right below 50 where we close. This is the same line I showed you from yesterday. It's still there as one downside target. And we have another downside target. We have a little cluster at 25.20. Now we're taking IV pop to make this happen. And then we kind of have in the 6,900 neighborhood, a pretty big cluster, and then down below, et cetera, et cetera. So right now, these seem a lot less likely than they did 40 points ago, quite obviously. And that's pretty much the basics of the plan. Let's take a quick look at which volatility dashboard we want to look at. Okay, well, let's look at this one. And okay, I want to get, this is Volvex. This is at the money vol based on Scott Nations Index. I want to put the VIX futures contract on it because yesterday, where is it? Where's the VIX futures? That's VIX 1 day. Where the heck is the VIX futures? Here they are. Yesterday, at one point, the VIX futures was trading higher than the VIX. So somebody was lying. And it looked like the VIX futures were lying. Now the VIX futures and the VIX make more sense. VIX futures about 2 points higher than the VIX. That makes sense. Remember, this is not talking about the February expiration for VIX, which comes up next week before options expiration. And that's something I'll write about. We'll talk about maybe over the weekend, VIX-free and VIX-free before options expiration versus after creates kind of different sort of dynamics.
Doc, which expiration for the VIX future you're looking at?
This is the 1 month.
So the the VIX future expires every month?
It rolls, yeah. Yeah, this is the monthly VIX future. They have the VIX 1 month, and here's the VIX 2 month. Yeah, so they have the VIX 1 month and the VIX 2 month. If you just want to play the VIX game for a second, let's just play another VIX game that I like to play. If I can find it. Oh, here it is. If you take the VIX minus the VIX futures, what we were just looking at, and you take the VIX minus the VIX 2 month futures, that's kind of a way of giving you the shape of the VIX curve. If you do the math, the term VIX cancels out, and you end up getting the shape of this curve. Now we're going back to intermediate algebra, which is 60 years ago, not 55 years ago. So those terms cancel out, and I'd show you this guy, every once in a while. I haven't showed him for a few days. A couple days ago, when we were in the toilet, and I was pointing to this. You can look back on the videos or on YouTube. I was pointing to this as the market was tanking. I was saying we're kind of near the bottom of this. Look at this, just kind of look at the history of this thing. Forget what it does. Look at the history of this thing. We get toward the top, we start topping. Now, of course, you can kind of skim along the top. We got to the bottom here. We undercut. And here we are. We're still in the middle of this, so there's still room. Of course, there's room to go the other way, but just kind of pointing, this is a pretty potent tool using the VIX futures curve, the 2 month versus the 1 month, subtracting out the VIX term. So anyway, that's it. So I'm not going to bother going through the nation's stuff right now. We don't have a lot of time.
If
Yesterday,
I can add on that real quick, we uploaded some really good shorts with Doc and Scott Nations. So if you're interested in that, go to the YouTube channel. You'll see some pretty good content from Scott Nations and Doc.
Yeah, thank you. Yeah, that's right. Scott Nations, we did an hour-long session with him a number of months ago. He was gracious enough to attend and to answer our questions and to explain his stuff. And I still use it. So let's just talk about his stuff since we're on it. So he has a number of a lot of proprietary indicators. The two ones that I look at the most are SDEX, which is, let's call it the one standard deviation, the demand for one standard deviation out of the money options, puts and calls. Let's remember skew goes in both directions, but let's just think puts, demand for skew. And then he has TDEX, which is the 3 standard deviation wings. And I'm not going to bother going through like what was bid up yesterday, what wasn't bid up yesterday. But interestingly enough, yesterday, the VIX 9-day, which is the near-term hedging, wasn't bid up as much as the VIX. We saw VVIX around 100. We saw the VIX kind of pop more than the short-term VIX, which is kind of normal. I just thought with what's going on with CPI coming up on Friday and that kink in the curve that we were looking at. Remember we were looking at this kink in the curve? I think we were looking at it over here. Unusual whales. I use a lot of people's different tools. I'm an equal opportunity tool user. I use the tool that I think is best for the job. That's just easiest for me to use. I'm not saying one tool is better, one tool is worse, just the ones that my eye is used to. And so where's the term structure here? Here we go. So this is a term structure. And it's not much sure how this is going to change after we open, but there's that kink in the curve. The market was saying, yeah, non-farm payrolls is important. See that? But we think that CPI is really important. And then we don't give a shit about what happens in the middle of the week next week. Yeah, then this is VIX-PRI, which I think is kind of short-sighted. But here we have OPEX, which is always going to be, it just tends to always have more vol in it. And then we kind of have this choppy ascent. And then at the 60 days, we kind of get a normal curve. At 60 days, things kind of normalize. Now, I haven't vetted this to see exactly how this, I think I could change some of these parameters, but I like the visual here. And so I actually was talking, I'm going to be talking with Spot Gamma later today, I think, or this week, about maybe using some of their tools. I'm still going to use options depth for my main gamma thing, but they have a lot of good volatility tools, fixed strike vol, whatever. So I'm going to talk to them and see what they're interested in doing. Maybe something, maybe not. We'll see. More will be revealed, like they say. So anyway, I've blathered on enough. I'm going to let Chewy talk to us about what he's seeing.
Let me pull up my chart. Perfect. Okay, guys, let's start off with our range. Got my range from about 69, let's call it 7,000, all the way down to 69.55, so about a 55-point range. Again, like I told you guys yesterday, my chart is relatively noisy. I'm not sure that we get a big move today. I think it would make sense to get the big move tomorrow. However, I'm prepared for anything, so let's talk about what I'm prepared for.
What direction are you thinking the big move tomorrow comes?
Up.
I know it's if then, but up. You think we finally have the breakout?
Yes, but I'm not sure that it happens today. And just to keep it simple to why, it's because my chart tells me the Qs still have a lot of downside in them. So if they're different charts, they're different indices, but I do think that they kind of weigh each other down. So I'm cautious to be optimistically bullish today. We are in my reject zone today or right now, so I think a nice trade down a pivot makes a lot of sense around open. If you don't like that, if you don't like trading open, I'd wait for maybe a push down a pivot and then a push back up to see if we reject here and then come down some.
Where is that? Where is that check back and then back up level about? Check back
975.
Okay. That would be 6950-ish ES SPX.
SPX, yeah.
Yeah. Looks like this thing doesn't want to stop.
Yeah. So I mean, again, if we just start pushing up, then that I think a news catalyst like we had this morning can kind of make levels of, I'd say, almost invalid. However, I can't trade that way. I have to trade the way I do every day. So again, if we break above my reject zone here, I'm going to look for a nice push up to 70.25. I think that would be a very easy trade. I'm trying to do
That's
this.
like another 20 points from here.
I like that trade less. I like to enter on reversals. That's kind of a bad habit, but it works for me. So I would almost wait for a pullback to then get that trade. Okay, so that's plan A. Plan B is we reject, we push up at pivot, and we stall, and then we come back down. This is almost my preferred plan because I'd rather trade upside when the chart is more clear, whatever you want to call it. I think the upside move can be a lot more violent, a lot more fun. We can obviously make a lot more money.
Okay, makes a lot of sense. And just let me show you guys something real quick. So in the spirit of spot gamma, I just pulled up their E-mini chart, and they don't really have a lot of levels in between here, but their stall is at, they have multiple stalls in the 70-12 to 70-20 zone. That's kind of, but there's really not much to go by. I didn't put my own string in there, so I can't really extrapolate it from that. Just kind of wanted to show you that. This is from a couple days ago, so that no longer applies. Anyway, let's get back to SPX. Okay. EM top. Oh, let me talk about this, because obviously everything's going to have to be adjusted. Let me just take a look at this real quick. And we're going to look at, let's just put up ES. I prefer to look at the ES expected move pre-market rather than SPX on these chains here. So 27 points now. So 27 points from here, based on the options market, puts us 27 points, puts us up above near that 70, 10, 15 area. 27 points pulled down brings us down to that 50, 60 area, to Julius check back area. And we'll see. We'll see. Will be revealed. Go ahead, Vol Trader. You got some paperwork for us?
Yeah, let me share the screen just a second.
Okay, and while you're sharing the screen, I guess I want to make a quick comment. In case some of you are eyeballing my positions, they say, Doc, why are you down $415 on UPS? It's because this was a trade I did 6 months ago, calculated to get a 6-month return of 20%, selling a near the money covered call, basically a buy right, including the dividend. So they can take it away and I'll get my 20%. I don't give a fuck. Pardon my French. So these are Doc's bond alternatives. I'll trade it. I'll get my 20% in 6 months.
You're holding the stock, yeah?
Now. Yeah, the stock UPS. You know,
and that's you're holding. You have the stock, so you just did a couple.
Yeah, I have the stock. Yeah, I did a buy right. Real simple. Yeah, I did a buy right. I bought the shares. I sold an at the money covered call. Actually, it expired worthless once. So I just shifted it out again. And so it's more than 20%. It's going to be about 23% trades. I mentioned them in the Discord. People take them. They don't. People maybe don't know us because Doc's got all kinds of ideas. I'm not short of ideas, believe me. And so anyway, I'm just kind of pointing out, though, so this Microsoft trade, for example. This is a January in the money, 450. 400 put spread. This was in the money when I sold it. I knew it was in the money. I don't care. based on the premium I ended up getting for this, I'd end up owning Microsoft nice and cheap. And I think we'll be above 450 by this time. So I end up not owning it. I got a couple grand for this. Or if we're below there, I can monetize this for this 400 put. Or I could probably monetize it now. I could and roll it down. So, you know, I'll do kind of trades that a lot of people don't often do. So anyway, if you like those kind of trades, you want to learn more about how I structure them, or you can, you know, kind of come up with your own variations, sign up. Okay, go ahead, Val. Now you're up. Okay. I hear you typing, but you're muted. I hear somebody typing, but you're muted.
Oh, sorry. So first of all, this analysis was done 4 hours ago. The main theme of it is early birds, bulls. That's how I call this analysis today. So while everything looks negative, or at least heavy, there are two main dynamics that everybody needs to be aware of, in my view. First of all, there's the magical VIX 17. I'll explain why that level. I don't know if you guys are aware or not, but we are holding that level for a week or so, and we are constantly rejecting off of it. For whatever the reason, one could explain that through the positioning and through other stuff, but what I have in the models is a consistent hedging bid, which is under the, so it's under the spot towards the put wing, consistently elevated bid there that is working on the hedging side and pushing the market makers to create that type of shape where the put wing of the skew is elevated rather than your usual straight line with a trough above the spot and then a straight line into the calls. So we can see that elevation here with the blue line. And positioning wise that I capture, those that I deem relevant for volatility positions are mostly negative. Like everything is red bars. The green bars just come. The green bars come above 7,010 or so. That's where people start getting more bullish, or maybe it's actually hedging to the upside rather than bullish. There's a lot of positions that we are aware of between 7,000, 7,020. Those are all the call speculators, call sellers, whatever you want to call it. Either way, into those levels, obviously massive resistance up to 7,005 on SPX because of that huge buildup. Basically, it's like if everybody's buying the call 7,000 when the spot is 6,950, it means nobody will buy the spot from 6,950 up to 7,000. That's basically what it means from a positioning point of view, of course. And that buildup generates a lot of resistance, which has some radiation all the way down to, in my eyes, 6970. Now, that said, if we look at the plain vanilla OI surface, which is basically this chart here, the one that says in the money puts and in the money calls, what we see here is a clear transition around 6960, 65, meaning that from there, there's a potential to the upside. But we are also seeing consistent in the money put positions, which are pretty large in size. When the spot was around 6950, those positions, while their numbers is smaller than the call open interest, the purple bars versus the green bars, when the spot was 6950, those basically overwhelmed in terms of delta, and the delta was negative. Now we swept through all these, and we're hovering SPX, I think 6990 or something. And so we basically need to overtake everything up to 6990 to then start being fully call dominated from an open interest perspective, with the last hurdle being the 7,000. Now, to the downside, even though everything seems bearish and the VIX is consistently holding that 17, right, for all the dates, like for the last week or so, even though the mean reversion model came out today like this. Basically, the red line is almost consistently above the zero. This, for a clean trend, either up or down, this should be red under zero under spot, and red above zero above spot. You can see it's twisted. Basically, everything under 69.60 is positive. So this indicates stealth buying, buy the dip, positioning to the upside, call it whatever you want. When I see this, I know that worst case scenario is we drop to 6,900 and bounce back to 6,950 from a mean reversion perspective. But this is so massive that I suspect that these are basically early birds coming in and starting to take positions to the upside. They don't care about the fluctuation that we trade off. This model looks at Friday to Friday. So it could look up to 10 days straight. So on Monday, it will look Friday to Friday, meaning it will look at 10 days. Right now, this complex is looking at today until next Friday. So only 7 days, or 8 days or whatever. So while everything is more bearish than not in terms of the structures, the in-the-money activity is actually very bullish. But again, early birds rather than a full-blown, onset of bulls. And so I'm not surprised we're getting this spike to the upside. But whether this can really go and push the 7,005, remain there, and then generate this trend, and maybe the Nasdaq will close the gap towards the all-time high like the SPX, that is yet to be seen. But obviously, the structure is very supportive if the market were to drop back down under 69.50. Now, we can still see that shape in the candy wrap model. We can still see it's pretty tight to the upside and pretty open to the downside. So the reason for this, most of the models will show a bearish configuration, no matter which one I would look at, other than the mean reversion, which is clearly bullish and can trigger these sharp short squeeze we're seeing right now. But that is more a starting point. You need the other models to also point to the upside for everything to be clean and ready and continuation. So again, I'm not so sure about.
I'll make a quick comment about the candy wrap, and I don't know all the things that go into it, but just a more generic comment. When there's that bearish bias in there, people bought puts, whatever it is, often buying fire insurance after the bond burned down. That's potential energy to the downside, but that's also potential energy to the upside. That's the whole, that's what makes this fun.
So putting everything together on the chart, these are my level for today. We have a wide mean reverting level area, sorry. So if the market goes down to 69.15, it bounces back up to 69.50. And if the market goes up to 7,000, it drops back down to 69.50. That's basically the yellow shaded area in the background. Transition wise, meaning I am long above, I am short below, is this cyan area between 69.40 and 69.65. And upside max resistance, like we could prove this from so many ways. Everything is consolidating into that 7,000, 7,010 level. That's a real hurdle. I don't know if we take it out or not. I will assume it's heavy resistance when we first tag it, and we'll flatten my long positions and look for short. If we were to breach that and a 30-minute bar would close above that, then the market becomes very bullish, and we'll see everybody chasing back their short positions or flat positions in the technology and software section. That will create a tailwind to the market, and everything can go up. Doesn't have to be today, but that would change the sentiment regime from negative, what we have been until now for the last week or so, and be much more positive. Obviously, downstairs we have 6,900, a very important level, has large positions in it. Probably Doc already talked about it, so it's very clear on my chart here. Would expect it to be support if we got there, but if that breaks, everything becomes very negative, and the mean reversion really fades out. So that's pretty much it.
Okay, great, thanks. Since you were talking about cues, let's see if I can see a good way to visualize this. This is not a great chart for it, but best thing I have right now. So this is the cues, this is spot gamma's model, and I just widened the time frame just to try to make a point. I don't know if you can see it here, but if we go back to October, was it? We got this level here, the 69, the 625, 26, 27 area. That of course we went and we made new all-time. This is for my gap fill friends. We made new all-time highs. We went above it. Then once we broke below it, we haven't gotten back above it. Once we broke below it, during like the recent weakness, we haven't gotten back above it. So I'm targeting my TA days, so to speak, the 65, the 60, the 626, 25, 27. I always draw my lines with a magic marker. This area as the next area, and I've actually have some QQQ flies. One I bought yesterday, one I bought a couple of weeks ago, kind of long in the 15-ish area, some at 10, some a little higher, and short around the 30 area, figuring that we stall out and we struggle right up in this area where spot gamma happens to have this call wall. Of course, if we take that out, party on Garth, and I don't really care because they're broker wing fly, so it can go right through it. It can go to the moon. I still make money. So anyway, just kind of, you mentioned cues, so I just kind of wanted to throw that in. But on a shorter time frame, let's just kind of look at this real quick. On a shorter time frame, that 620, 22, that round number area is kind of the first stall. And then 60-30, where I have my call sold on my flies out. I think I have some the 27th of February and some March, maybe, guess I give myself time. Yeah. So that's just kind of, we talked about the cues, so I want to throw that in. I'm not just a one-trick pony, but SPX is my main moneymaker. Any closing comments? It's 9:13 already, so let's just let me get ready to wrap it up. And I'm just going to talk about the website. The website is docsoptionsgelt.com. And I'm going to try and get something out with the accelerator course, hopefully over this weekend, something, a beta or something. Want to get something out. We'll talk about how we're going to launch that. I got ideas. I'm not short on ideas. Yeah, so we have this on the website, and Ben Hombre's got his course, his boot camp. You want to tell him about your boot camp?
Yeah, and just as a reminder, guys, my course will stop being offered when we do the accelerator. So if you're interested in kind of the full rundown of what I do, all of the extra time to do the exercises and hands-on approach, pull the trigger now, because once we're out, it's going to be, oh, I don't want to say simplified, but just shortened down to make it a meshed program. So if you're interested, now's the best time.
So wait a minute. I don't know if the folks actually realize what you're saying, so I'm just going to want to flesh it out a little bit. You're saying hands-on tests, you're going to be kind of walking people through stuff for 2 weeks. Is that right? Is that what they
For
get?
2 weeks straight. Yep. We take the setups. I show you how to break it down. Good setup, bad setup, great setup. When to sit on your hands, when to size up, when not to. All the good stuff that you'd want to know, that I would want to know if I wasn't making money.
Even that boring money management stuff?
Even the boring money management stuff. Yep.
But isn't that really important for people that are trying to get the prop trading and all that? They want, that money management is way important.
Oh, that's the killer. Yeah, without that, good luck getting the payout.
Yeah, I know so many people that have been doing it for 6 months, and then they're close to it, and oh shit, they have one bad day, and then they're paying another $500 or whatever it is. And they get sucked in like Las Vegas.
Yeah, so, I mean, we want to get you past within the first 2-3 weeks. Most of my students pass within the first week, and if you maintain that trend, that money management, you should get paid in about a week's time. So I'll definitely help you out. I've been on leaderboards for the prop firms, so it's just about understanding what you're working against and how they're meant to protect themselves. Pretty, I don't want to say easy, but it's a lot more straightforward than you'd think.
Okay, great. So all you prop trader people, I think it's a worthwhile investment. Here's our testimonials, blah, blah, blah. Okay, anyway, I'm gonna sign off now. Is the link to the website in the
YouTube description somewhere?
Yep. Okay.
Always.
So look in the description on Twitter, on YouTube, and click whatever you want to click. And on Twitter, in my bio, I guess it is, and there's a link tree. I spent hours figuring it out. It probably takes 2 minutes for the average kid, but for me, it took me hours to figure out how to set up a link tree. So I have a very lame link tree there that I think has all the links. Someone out there on Twitter can tell me if it's actually working right, because I can't tell. Anyway, take care, trade safe, and of course, as one would expect, let me just switch back to the real deal Holyfield, which is my stuff. We're stalling out right where everybody said. Holy shit, top of the chop. Let's see, this was the chop zone 40 points ago, so you kind of have to kind of mentally shift your levels. So let's see what happens. Let's see what happens. It's going to be fun. I don't have any positions on for today. I have a little call, something or other. I have my flies at the time. I'll probably monetize those because I have paper hands. I'm famous for it. But I won't be in the room or around later in the day. I'm actually have to go for my hearing aid fitting. Hearing aids, this isn't a hearing aid, this is an earpiece, but at 73, I need hearing aids.
Goodbye, everybody.
So I'm gonna go get my hearing aids later. Goodbye, everybody. And then I'll be able to hear you more clearly, hopefully. Take care.